Good evening, ladies and gentlemen. I'd like to welcome you to our weekly investor forum. Today, we'll be doing things a little bit differently as we start off with Mayberry Investment Jamaica Equities Limited, courtesy of Natalie Augustin, Managing Director of the company, and Mr. Christopher Berry, our Executive Chairman. Over to you, Natalie.
Thank you, Dan. Good afternoon, ladies and gentlemen. Dan has taken a bit of the steam out of my wings. My task is to welcome and thank you for signing in and joining us on this afternoon's virtual investment forum presented by Mayberry Jamaica Equities Limited. My name, as Dan said, is Natalie Augustin, and I am the Managing Director of Mayberry Jamaican Equities, or MJE for short, operating and joining you from MJE's seat in St. Lucia. I'd like to specially recognize our chairman, Mr. Christopher Berry, as well as Mr. Gary Piet of Mayberry Asset Management Limited, which entity provides sound management and investment advice and services to Mayberry Jamaican Equities on our collective behalves. Today's forum serves to provide you with a general overview of the company's performance to date. It will touch on some of the experiences of and the main takeaways from what I like to call the year that was 2020. And we'll go on to highlight the current position and prospects for 2021 for MJE. As time is limited, I'd like to hand you straight over to Chairman Berry for his presentation.
Thank you, Natalie. Good evening, everyone. It's a pleasure to be done with 2020. So, studio, can you start by rolling through the presentation? And we'll just take it slide by slide, please. Next slide. Next slide. Okay, so the highlights of the performance last year. So as we all know, the stock market in Jamaica took a big hit last year. We ended the year with total shareholders equity of 83 million, net book value per share of 7 cents US per share, and our assets basically reduced by 36.9 million. So we had a negative total comprehensive income of 36.9 million US. Next slide. So, slide's kind of small, studio, can't see it. So the highlights of the performance last year are total operating income was negative 5.8 million, net profit minus 8 million US, total comprehensive income negative 37 million, and loss per share of 0.007 cents. Shareholders' equity rounded out the year at 83 million and net book value per share 7 cents US per share. Next slide. So total assets were down 34% from 150 million to 99 million, and shareholders' equity was down from 130 million to 83 million. And net book value per share fell from 11 cents to 7 cents per share US. Next slide. So in JMDs, that's $14.29 net book value per share, 2019 December, and we closed the year in 2020 at $9.90 Jamaican net book value per share. And right now we're trading just around $8. So the stock is trading at a discount to net book value. Next slide. Studio, next slide, please. So this graph demonstrates the movement in the NAV over the last 12 months versus the stock price. And here you can clearly see that the stock is trading at a discount to NAV, which means that's a good buying opportunity. Next slide. So our top holding remained Supreme Ventures at 51.9%. You recall that close to the end of in 2019, that traded as high as 30, and it's now trading at about 15. Dermont Trading Company, 7.5%, Caribbean Cement, 6.2%. And one of the big additions to the portfolio, a little bit too early, I think, was Wigton Wind Farm. So we're now at close to 10% of that company. Caribbean Producers, 4.5% of the portfolio. That took a big hit because, as you know, the hotel sector was pretty much closed down for most of last year. Jamaica Broilers did well, 3.3% of the portfolio. We also added Grace Kennedy last year, 2.3% of the portfolio, and that did very well. That's up almost 40%. Next slide, please. So this basically shows major additions to the portfolio last year, which was Grace Kennedy, which is up 39%, and Fontana, we almost have no Fontana left. And next slide. I think this slide speaks to our core values: integrity, accountability, creating wealth through information and knowledge, attention to detail, and that we care about all of our shareholders and the community at large. Next slide. And finally, our mission to be the only Jamaican stock you need to own. So Dan, if there are any questions, we can open up for questions now. Dan, are you there?
Yes, thank you very much for that presentation, Chairman. I have really only one question. It's a general question, and then we'll move on to our presentation. And for viewers out there, if you have any questions, please feel free to send them in care of social media. So my one general question is, the MJE was down 35%. The market overall was down about 30%. What's your general outlook for this year?
So this year, I see most of our holdings coming back. Already in CPJ, we're seeing our revenues rise, and it's pretty early in terms of the vaccinations in the US and Canada, which are the major markets for the tourism. And we expect that trend to flow through to most of the companies that we're holding. Grace Kennedy, we're expecting big things from. I think that company has broken the code in terms of exporting profitably into the major international markets. So we think that's going to go from strength to strength. And we think that's the trend that we expect over the next 18 months, 2 years.
Okay, excellent. I too am very confident, Chairman. As you said, CPJ, it's coming from a high of $6.70, perhaps average $4.50 all of 2019. Already up 22% this year, today closing at about $3.20. And I think CPJ is got lots of legs in it. There's no reason why this stock won't be back at $4.50 in the next 12 months as tourism comes back strong. You mentioned GK, again, up 40% in this year. So again, we just talked about the financial results to December 31 and the fact that the overall fund was down 34%. So I'm talking about what's happened since that, guys. So March results obviously not out yet, but CPJ up 22%. That's got 50% more to go in my opinion. GK up 40%. As you said, they've broken the code. Lumber, another one that's in the portfolio, already up 60% and still has more legs to grow. So I totally think this year is going to be a great bounce back year for MJE. And I'm sure under the guidance of Chairman Berry and Peart, we won't have any issues there. Okay, so I'm going to move on throughout our presentation. We'll come back with more questions. I expect them to come on social media. But right now, we'll be jumping into the company profile of this week's featured company before I formally introduce our guest speaker this evening, who is Mr. Yago Castro. He's the General Manager of Caribbean Cement Company Limited. And we're encouraging viewers to post their questions on social media and to remember to tag us with the hashtag MIL Investor Forum. If you enjoy this program, be sure to like, share, and subscribe to our YouTube channel. We'll also be featuring a market segment on foreign exchange, so be sure to stick around until the end of the program. Okay, so Caribbean Cement Company Limited is a publicly listed company that was incorporated in 1947 and commenced operations on January 28, 1952. The company is the sole manufacturer of cement in Jamaica. The principal activities of Carib Cement and its subsidiaries are the manufacture and sale of cement, clinker, and the mining and sale of gypsum, shale, and pozzolan. The group operates in Jamaica. The addition of its world-class kiln and mill, commissioned in 2008 and 2009 respectively, has placed Carib Cement in a strategic position as a major exporter of cement in the region. Carib Cement Company Limited has a rich history in corporate responsibility. Their contributions include, but are limited to, annual scholarships for all levels of education, school, and community development, and giving back to the environment by planting trees and removing tires from the Riverton dump. The company also aided in the fight against COVID-19 by contributing PPE items to frontline workers, allocating over $2.3 million to schools for health and safety items, and providing technological support for digital learning. I take this moment to remind you that if you're seeking to expand your portfolio or embark on your first investment journey, Mayberry Investments can be your guide to achieving your financial goals. Follow us on social media and visit our website at www.mayberryinv.com to learn more. Now let me introduce you to our guest speaker for this evening. His name, as I mentioned before, is Yago Castro, and he assumed the role of General Manager of Carib Cement back in August 1, 2019. Having obtained a Bachelor of Science degree in Chemical Engineering and a Master's of Business Administration, Yago has a strong technical and operational background, coupled with financial and strategic management skills. He has extensive industrial and strategic experience developed over 15 years in various key positions at Cemex operations in Europe, the Middle East, and Central America. His most immediate post was that of the General Manager of Arawak Cement Company Limited in Barbados. Prior to Barbados, he was the Planning, Procurement, and Legal Director for Cemex in Nicaragua, Guatemala, and El Salvador. Today, Mr. Castro will be giving us an investor update on Carib Cement Limited. Welcome, Yago. Welcome, Yago. Thanks so much for being with us.
Thank you, Dan. Thanks for the invitation.
Excellent. I'd like to start, Yago, by doing my own little presentation on Carib Cement from our investor's perspective, just to talk a little bit about the results and how well the company is doing before we jump into asking you some questions. So, studio, if you put up that slide, I'd like to share some information about Carib Cement. So here we go. First of all, just looking at how the share price has traded over the last 2 years, I do wish to note that this stock has traded with a high of $77, and today closed the market at approximately $65. It's a great stock. Today it's trading at a PE of 17 times, and a market average that is about 17 times. And they have trailing earnings of about $3.1 billion. Very few companies can boast of making a $3 billion profit in the last year. On the next slide, I just want to show a little bit more about that. They managed to grow their revenues in a COVID year by 13%, growing from $17.7 billion to $20 billion. They also managed to reduce their operating costs by 6%, and they managed to reduce their finance costs by 14%, therefore increasing the profitability of the business by 62% before tax and 70% after tax. As I said before, they've made $3.2 billion in the last year and grown their shareholders' equity to $11.5 billion. So Carib Cement is no joke. And on the last slide, before I go back over to Yago, we look at the profitability by quarter. And again, just take a look at the last 2 quarters. $1.2 billion profit in their third quarter and $963 million in the fourth quarter, which is traditionally a slow quarter because of the Christmas period and so on and what happens in the construction industry. But Carib Cement has obviously broken the code, generated huge cash flows, reduced operating costs, and reduced finance costs. Obviously, this is a company going places. And so with that, Yago, I would like to ask you my first question, which is, what percentage of the company's revenue is attributable to exports versus local demand?
Okay, Dan. I don't know if you can hear me well.
I can hear you very well.
I'm seeing that my internet connection is not that good, so please let me know, right? Okay, I just disconnected my camera because of that, but well, answering your question, Dan, we are 100% focused on the local market as of today. One of the things that are happening in Jamaica is that the construction market is actually booming. And let me give you some big figures. I mean, in terms of cement consumption, what we are seeing is a year-to-year increase of almost 9% when you compare 2020 with 2019. So basically, we are focused now in sourcing properly the local market, and we've reduced or even eliminating every export for the time being.
Yago, second question for me. Tell me, how did you manage to reduce operating costs by 6%, increase revenues by 13%, and reduce your finance costs as well at the same time?
Well, as you were explaining before, Dan, I mean, the top line of the P&L has been benefited from what I was explaining before, better tone of the demand, growing market in terms of cement consumption, as I said, almost 9% year to year. So at the end, we had, let's say, some tailwinds in terms of revenues and good tone of the market, as I was explaining. It's not that we've just stopped there. I mean, is that we've also been very strong in keeping on curbing down our fixed costs, operating costs, and keeping them under control, which is something very important to work also on the bottom line of the P&L in order to enhance the EBITDA growth. That is one of our strategic objectives. So I would say basically on the top line, benefiting from higher revenues, and then also all the CapEx investment, platform investment that we've been pumping into the company for the last 3-4 years now, it seems that they're starting to pay off. So we are also benefiting from a higher, efficiency in our operation, in our processes. So putting all that together is basically the reason why we've been able to generate cash flow, and that cash flow has been mainly assigned to reduce debt. So that would be basically it.
Excellent. And when you put that all together, you get a 70% increase in profit. Absolutely impressive. Gary, any thoughts or questions from you to Yago?
Sure. Good afternoon, Yago. Good afternoon, audience out there. The big question, Yago, when is Carib Cement going to pay a dividend?
I was expecting that one from you, Gary. I prepare answer for that. No, look, I mean, you know how we operate. I mean, we are always thinking and focused on how to create value for our beloved shareholders, right? So it's something that for sure we'll have to analyze. I mean, just bear in mind that, for example, this year is going to be the first year with positive accumulated earnings. It's true that we had a good year in 2020. It's also true that the beginning of 2021 is being good as well. But it's also true that we still have a lot of, let's say, needs in terms of investment in the plan. We are not there as yet. I mean, we need to keep on pumping money into the organic growth of the plan and the company. We also have important levels of debt that we have to honor, and I mean different things that could mean the right usage of the cash flows that we'll be generating. We are generating. So it's something that is on the table, but at the end of the day, what it really makes sense is what we can do best to maximize value for our shareholders. I think that, humbly talking, we're doing a nice job. I mean, I was just reviewing before the value of the share in 2014, just when Cemex came in, was basically and barely $2 per share, and now Dan was saying something like 65. So, I mean, the way we've been allocating the capex and using the cash flows coming from the organic business, I think is being quite good, as we've multiplied by 35 almost the value of the share. So just wrapping up, we'll be analyzing every option to maximize value for the shareholders. And of course, the payment of dividends is something that will be on the table.
Thanks, Yago. I appreciate that. Chairman Berry, I know you're one of the early investors in Carib Cement. How are you feeling about Carib Cement? Do you have any questions for Yago?
Yes, I have two questions for Yago. So first of all, I want to congratulate Yago. We've had some really great managers since Cemex took over the plant, and they've really done a fantastic job. So I want to, as a shareholder, I definitely want to thank Cemex and Yago for his hard work on that. So the first question, Yago, is I'm just going to go back to back, and then you can answer. My first question will be, I know you guys do forward planning in terms of what your market expectation is. Are you expecting another 9% growth year this year for cement? And of course, I know you can't guarantee it, so this is just an estimate. The second question will be, so many Jamaican companies have taken advantage of switching their debt from US to Jamaican dollars, because in the best of times, we have a 3% devaluation, and in the worst of times, we have a double-digit devaluation. So it almost seems like a no-brainer when there's hardly any difference in the nominal US dollar interest rate and J dollar interest rate. Why is cement not switching out its debt to JMD? Those are my two questions.
Okay, thanks a lot, Chris. Very good questions, by the way. I think you went straight to the point. Look, regarding the expectations for this year, 2021, we are now in what we consider a kind of extraordinary situations in terms of market demand. We are seeing an increase of 9%. When you put together the aggregated increase, considering also the first quarter in 2021, it seems like we are somewhat in double-digit growth compared to the baseline of what Jamaica used to be. I mean, it used to be a market of 0.95 million tons a year. We are exceeding 1.1 right now on annual terms. So, and as you rightly indicated, I mean, we don't have a crystal ball of what's going to happen, but what I would say is that, in my opinion, it's difficult that all these very good tone can be sustainable for the mid-long term. I would hope so. I really pray for it. I mean, I would love to, of course, but it's hard for me to believe that, that suddenly the baseline has just moved from 0 to 15%, when I don't see a lot of fundamentals in the economy changing at the same pace. But it's true as well that, I mean, we have very good term in the retailing. I mean, a lot of bag cement is being sold. At the same time, the hotel industry is expected to come back. I guess that the U.S. tourism will be back somewhat within probably the second quarter, especially through the third quarter. We are starting to see that some hotels projects that were stopped or halted before, now they are gaining traction again. So that is going to help, and that together with all the public programs in order to enhance infrastructure, these low-income housing projects that has been announced by the Prime Minister office, that should help. So how the whole aggregated demand is going to perform in the coming months, I don't know. There's a lot of uncertainty with the pandemic. We all thought that the pandemic was going to affect us very, very badly, and it's being a kind of the other way around. So just answering your question, I don't know what's going to happen. For me, it's hard to believe that this storm is going to last sustainably for the mid-long term, but anything can happen. I've missed my estimations too much, this year, so I'm not in a position to predict properly. That from the first question point of view. From the second question, Chris, what I would say is basically, and you're right, I mean, we were giving a lot of problems coming from the fact that we have basically all our revenues in Jamaican dollars, and the Jamaican dollar is fully depreciating at the rate between 5 to 7%, and at the same time we were soldering important levels of US dollar nominated debt. But I mean, if you take a good look to our balance, you will see that basically all that debt reduction that was commented before is US dollar nominated debt that we've been carving down and pulling down. So basically we are just in a point in which we basically have gotten rid of all the US dollar nominating debt. There's just a little. So that, I mean, the exchange rate loss is not going to be an issue anymore for us. We tried in the past to convert, from US to Jamaican dollars. There was a lot of talk, but once we tried to tackle the financial markets here, it was not that easy. I mean, we could not make it. But anyhow, it's not going to be an issue anymore as we've been just making it disappear. So now we will be working on the Jamaican dollar portion of the debt.
Okay, so Yago, my perspective on that is next time you have that problem, you need to call Gary, Dan, and I, and we will solve it. We're good at that. On the growth issue, Yago, I think barring some major recession, I think you're going to see generally higher growth numbers. I'm not promising you consistent double digit. I don't think you're going back to those low growth numbers that you saw in the past, because the way the economy is organized now, the JMD rates are very low, and the government has reduced the debt load a lot. So it's creating a lot of overhead for the government to invest in infrastructure, and also the private sector. And also you're going to start seeing a lot of PPP, government and private sector projects where it's more funded by private sector rather than government debt. So I think you're going to see a big growth in infrastructure in Jamaica in a medium to longer term. So it's you may not consistently be in 15%, but I don't see going back down to the very low figures that we're accustomed to from 2012 and those years. And so I think you should make sure that your plant is ready to pump out cement, my friend. We're going to make some money.
Thanks, Chairman. Thanks, Yago. That leads me to my next question: is what is the life cycle of the cement kiln and mill? So we know you made those huge investments. What's the life cycle on those, Yago?
Well, basically, Dan, I mean, this is a very capital-intensive industry, as you know perfectly. I mean, the life cycle of this asset, like the one, I mean, different equipment we have in the plant, basically depends on the amount of capex that you allocate on them. As soon as you cover the depreciation of the fixed assets with new platform capex, I mean, basically you will be renewing the machinery on a continuous basis, and you basically will have an asset that I wouldn't say it would last forever, but it can last for very, very long periods of time. So we are being very thorough in the way we, as I said before, the way we allocate capex and funds to not only to keep our equipment, but also to continuously upgrade it and take it to the next level. So I don't see an issue there. And answering your question, I mean, the plan is not on a downward trend in terms of depreciation of the machinery, not anything like that. I mean, it's the other way around. We're just upgrading different sections of the plan. I would say basically rebuilding even complete and whole sections of the plan, and increasing also the value of our assets on a continuous basis. And that is the result of basically allocating something like 1.5 billion Jamaican dollars on average every year, pumping that big amount of money. And that's been a constant from the time when Cemex took over. And it's also the plan that we have for the coming 5 years, in which we've reserved a total of $40 million US for both platform capex and also expansion capex, because Chris, as always, I think is right in one thing. One thing is that what we believe about what might be the future of the demand, but that doesn't mean, it has nothing to do with the fact that we need to be prepared. And what I can tell you is that we will be very surely prepared to capitalize on a 25 or 30% additional production capacity.
Excellent. So in terms of your current output capacity, how did the plant operate throughout 2020 to meet the demand? What percentage of your capacity are you running at? How much spare capacity do you have? What potential do you have to grow the business further with that existing plant that you have?
Yes, well, our current capacity is increasing every year. I mean, last year we were able to produce close to 1 million tons of cement. That was a new record. And this year we're going to exceed that amount. I mean, we will be comfortably over 1 million tons of cement in the year if we need it. That will depend on the market. Our plan has a nameplate capacity of 1.4 million tons. All right. So that's what I was saying, that our capex plan, is designed to capitalize that additional 25-30% production in the coming 2 to 3 years. That is the plan.
Excellent, impressive. Gary, any further questions from you for Iago?
No.
Good deal.
I'm looking forward to 2021, where the performance continues. I think the indication is that he had a very strong fourth quarter. And so it's a nice segue into 2021. So I expect greater things and the dividend in 2021.
So, Iago, I have another question for you. So in the past,
Sure.
The company has always been criticized for shortages of cement. Can you speak about what happened in 2020 with shortages, and what can we expect going forward? And what do you have to say to any architects, engineers that's doing major projects and they want to be sure that they have availability of product?
Yeah, sure. Well, you're very right. I mean, Cara Cement doesn't have the best story or histories in terms of eventually creating shortages to the country in the very past years. This is something that we've been soldering, let's say, this fame of eventually creating this disruption. I don't think this is an issue anymore. And I think we demonstrated last year. Last year was a very special year in which, at the mid of the year, suddenly we saw a big jump in terms of demand of cement. And it was a year in which we were able to respond. We were able to serve the market basically I would say something like about 95% of the total market with local cement, local produced cement. And that it was also a conclusion and a consequence of something that happened, is that all markets or many markets suffer the same situation. I mean, all the local markets started demanding much more cement, especially in our region. So what traditionally had been export sources in other countries like Turkey or China suddenly dry up. So it was a very complex year in terms of how the demand, elasticity performed, and how the different dynamics interchange. Putting all together, we were able to produce what the market needed, even in a situation in which the demand got stretched dramatically. So I think it was a very good test for us. I think we did a nice job, honestly talking. I think the numbers are there. And as I said before, this is only one way, guys, and it's going upward. And I can tell you that, I mean, we will be allocating whatever is necessary in terms of CapEx, training, performance of our people, working on productivity, and we will be releasing and unleashing more and more potential till we capitalize at 1.5 million tons of cement a year. So answering your question, I mean, we've improved a lot. We are comfortably sourcing the market, even in the current situation, and we will keep on doing that. So.
Thanks for that, Yager. And you've partially answered my next question, which is, do you think the demand for the local market will remain at current levels, or will it be growing for the next few years?
Well, as we commented before, I mean, it's difficult for me to say. As Chris was explaining, I mean, there's certain levers that can make you think that it will, but at the end of the day, as I explained before, I mean, we are working at the levels of demand that are well above what we consider the baseline of the country. So we are like 10, 50% above that baseline. I don't know what to say. I mean, we'll be prepared is what I can tell you, as I was saying to Chris before. I mean, we will be prepared to capitalize and to respond whatever the market decides to be, and really pray and hope that Chris is right and that we are gonna live some golden years in the coming 3 to 5 years.
No doubt. So we talked about housing, we talked about the government's ambition to do, substantial amount of homes over the next 4 or 5 years, 80,000, I believe. We talked about hotel construction coming back on. Again, we know there's the ambition to do about 6,000 rooms, again, over the next 4 or 5 years. Let's talk about roads, Iago. So we've got quite a few highways that are going to be built. There's one on the south coast. There's a bypass from Mandeville. Let's talk about road construction and how that demands cement, and then concept of cement roads, but not just cement roads, but the idea that these highway constructions will also demand cement.
Yes, definitely. I mean, I guess you're asking also about the possibility of start building concrete roads in Jamaica, right?
That's a second twist to the question, but even without the concrete roads, even with the highways, there's still going to be demand for cement, correct?
Yeah, that's completely right. I mean, even though if the main solution applied to the road is asphalt, even that situation that there's a underlying cement consumption on those projects for different components of the roads, also to stabilize the base on top of which you apply the asphalt. So yes, definitely that will help. I'm not gonna say that is a huge consumption of cement, because it's not, but yes, definitely that would help.
Yeah. And then let's talk a little bit about concrete roads too. I mean, this has been a bit of a debate for a while. I remember having this conversation with former general managers like Peter Donkersloot and other friends. I mean, what are your thoughts about the use of concrete roads, versus asphalt roads? It's a debate we've had for a bit, but I'd love to hear your perspective.
Yeah, definitely. And I know he spreads a lot, and I think he was completely right. I mean, he explained many times about the convenience of this solution for Jamaica. Once you live here and you see the status of basically, tunnel roads and rural roads, and even sometimes main roads, and you see all the patches and, all the high needs of continuous maintenance that those roads demand, you come to a conclusion that yes, really concrete roads might be a beautiful solution for Jamaica. I mean, we've met also a couple of relevant stakeholders also at political level, and they are convinced step by step they are getting into there. It's a change of paradigm. It's a change of thinking. I mean, it's not just, okay, we're gonna just start building concrete roads. It's not that easy. I mean, we need to start working with the architects, with the promoters, and I think we can have a beautiful role there. I mean, we have very good experience in building concrete roads. Even though we are not a construction company, we have an important infrastructure division in Mexico, and we are, I think, humbly very good in making concrete roads and concrete paving. So this is something then that is a can that we haven't opened as yet, but I think this is going to be one of our main strategic pillars to develop what we call growing the pie for the cement industry in the coming years. And I think we can have a very good role. We will work together with authorities, with administrations, and we really and truly believe that this is a long-term solution that makes a lot of sense for Jamaica.
Yago.
Go ahead,
Yeah.
Chairman.
Yago, I have a question for you. So one of my friends, he wants to set up a clinker crushing plant to make cement. He says he's going to sell cement a lot cheaper than you, and it's good for Jamaica because you know, the construction industry, all of those people will benefit because they will get cement a lot cheaper than what you're selling it for. So can you tell me, is there a flaw to this argument? Is he talking sense? Does this make sense, what he's saying?
No, it doesn't. It doesn't make any sense at all. I mean, I think we've discussed about many times, you know, when you just invest in a grinding mill, you are basically leaving 80% of the production process out of the country. You are just importing 80% of the final product. So you are leaving 80% of the total economy related with cement production out of the country. That means that you only keep 20% of all the value that is generated around a production manufacturing of cement. So, and it doesn't make any sense at all in a country like with the scale of Jamaica. You will make, you know, the whole country totally reliable and dependent on imports. So you will be totally depending on what the international prices are, what the international availability are or is. And it's something, as I explained before, that, for example, in 2020, that would have meant that the country would have ended up without enough cement, and we would have destroyed our GDP growth, as the construction sector was one of the few fields that really pulled up the demand in terms of aggregated GDP growth. So at the end, you're leaving basically 80% of the value, the jobs, all the taxes that are paid, you leave that out of Jamaica. Of course, for the guy who is doing the business, can be for himself or for his shareholders, it can be a good business for them, because it's like trading people who can import and resell something internally in the country and do a profit for themselves. But it's a question of what type of model you want for the country. If you want the model of short-term profitability for a few, which is the case, or if you want the model of long-term profitability for a whole country, which is what we believe that brings a company like Cemex pumping a lot of money every year in a manufacturing plant like this one. Because let me tell you something, producing in Jamaica is not cheap. The cost of electricity is high. The cost of the level of salaries that we pay at Car Cement is also very high. When you put all that together and you consider the scale of the country, you come up to a production cost that probably is not competitive to a guy who is bringing some clinker from Turkey or China. I mean, the scale of the country is not the same. But I mean, if we don't bet and we don't invest in the long-term growth of the country through local manufacturing, I don't think it's a big deal for Jamaica. I think that the model that you're trying to have here, it makes much more sense, in my opinion.
Thanks for that, Yago. I totally concur. I mean, we want to be focused on value added where we can, reducing imports, not trying to increase our import dependency and then our exposure to commodity prices. So I think having the cement manufactured in Jamaica is what makes best sense. I think what we need to do is help you focus on how can you improve efficiencies. And for instance, energy cost is a big deal. You and I have spoken about energy costs before, and just looking to see how Carb Cement can continue to improve its efficiencies, because energy is a big number for you. You're perhaps, not perhaps, you're definitely JPS's largest single point customer in Jamaica. And so I think it's significant that you have a reasonable cost of energy that allows you to be even more efficient and more competitive in terms of producing low-cost energy. Besides expansion, my last question for you, what are some of the strategic initiatives planned for this year and beyond?
Okay, Dan, thanks for the question. You're right, expansion, as I commented, is probably our our most important strategic initiatives in terms of basically of allocating the funds. But I would say that, I mean, we have a portfolio of strategic initiatives very well aligned with the strategic initiatives of our company, of our parent company, Cemex. I mean, first of all, different stakeholders, the employees is the first one. Always the health and safety of our employees is our first priority, and it's also our first strategic initiatives. Second is, putting the customer at the center of everything we do. I mean, we believe that Carb Cement really still have a very good opportunity to increase the level of service that we have to with our customers. We need to keep on working on that. The third pillar, strategic pillar, would be sustainability of our business. We already commented about the economic or financial sustainability of the business, which is very important. We commented upon that when we discussed about the dividends, but it's also related with what we call the carbon footprint. We will be investing and we will be putting a lot of effort in reducing the total CO2 emissions that we produce as a cement industry. That is something very important for us, and we are aiming to be what we call carbon neutral in some years, globally wise, but also here in Jamaica. The fourth pillar that is essential for us in order to keep maintaining our productivity and efficiency is innovation. We are really moving forward internally in creating this innovation environment that can create new ideas that can help us to go to the next level. If we don't change, we will die eventually. And finally, probably the most important, if you want, EBITDA growth. I mean, guaranteeing the financial sustainability of the business for the long run. As I explained before, creating value for our shareholders is always very, very important for us. So that can be and always have to be a strategic pillar for our strategy in the coming years.
Thanks so much for that, Yago. I do appreciate that comprehensive response. We now move on to the questions that are coming in from social media. First one comes from Abel Donfoot. Hey, Abel. He asks if MJE is planning to average down on some of its existing holdings. So that one's for you, Chairman. Abel Don is asking, do you plan to average down on some of your existing holdings?
So I would say at this time, we're kind of looking for we have been doing that throughout most of 2020. So we built cash in the end of 2019, early 2020, and once the prices fell, we've been buying, and Grace was one buy we did, and there were several others, and we're always looking for new opportunities. So the answer will be yes.
Thanks, Chairman. Second question comes in from Matthew Preston, and he asks, is Carb Cement considering exporting to markets outside of the region? Yago, is Carb Cement thinking about exporting?
Yes, of course. I mean, this is something that we would love to. We are also preparing some of the installations close to our ports to articulate our export and enhance our export capacity. So I was explaining before, as soon as we will develop some more spare capacity, we will be keen and actively searching for export destinies. We already have a couple of them in mind, but yes, definitely, as soon as we can create that spare capacity, we will.
Thanks, Yago. Another question coming in from Shelly Ann Thompson, and she asks, speaking of cheaper price, there is now talk within the industry of an impending price increase for cement. Is there any truth to this, Yago?
I mean, this is a multi-angle conversation about the price. We are suffering, as I was explaining before, an important Jamaican dollar depreciation. We've been trying to work on the bottom line of the P&L in the last 2-3 years. I mean, keeping our prices basically stable in Jamaican dollars. That means that we've assumed a loss around 15%, in US dollars terms in our prices. Of course, that is eroding our margins. But yes, we've been working basically, as I explained before, reducing the bottom line of the P&L through operational efficiencies and all that. So for the mid-long term, it's necessary that we have a fair pricing. We need to keep, depreciation under control. Otherwise, we will be eroding our margins and destroying value for our shareholders for the mid-long term. So the idea is to have fair prices, to always take a look to support the economy the best way we can, but we also need to guarantee the sustainability of the business for the long run.
Thanks again, Yago. Another question coming in from Matthew Preston, who asks, would Carib Cement consider renewable energy to offset some of its current production cost?
Yes, this is something else we are taking a look. I mean, the problem with sustainable energy and cement production process is that cement production process is a 24/7. It's a non-stop producing, and you know this very well, Dan. You know much more than I regarding energy. You always need to have a continuous supply of energy, and you cannot rely 100% in having wind power or having solar panels. That could be complementary, but that could ever substitute 100%, the traditional supply of electricity. But the answer is yes. It's part of what I was explained before about our sustainability program for the coming years, and it's another way to reduce our
carbon footprint.
Right.
And speaking about your contribution to reducing greenhouse gas emissions, a lot of people don't appreciate the program of burning tires in your kiln. Could you just tell us a bit about that?
Yes, and thanks for the question, Dan. That is a very relevant point. One of the ways we have in a cement plant to reduce our carbon footprint is the usage of alternative fuels. What we call alternative fuels are fuels that basically reduce the amount of coal or heavy fuel oil that you have to use in the kiln. That can be, I mean, there's a extensive variety of alternative fuels that you can use in a kiln. And one of the most important ones is the tires. So we signed a memorandum of understanding with the government of Jamaica. Yeah, and we are ready to, I mean, we did a testing phase, it went very well, and we are now ready to go to the next phase. So I think we are quite close, pretty close to start using them on a continuous basis. We are having continuous conversations with the government, and I think that probably we'll be able to announce a final deal, let's say, to start using them on a continuous basis in our team and in the Rockville plant.
Excellent, Yago. I appreciate that. Really appreciate you coming on live and answering all of these questions. I'd like to congratulate our winners from Instagram for the giveaway today, courtesy of Caribbean Cement. They were Mr. Sir Flex, also Ricardo Morrison, and Shedi Weddy. Congratulations, guys. Thanks for participating in our program. Next, we'd like to move on to our top gainers and decliners this week. Starting with the decliners, 138 Student Living, which went down by 20%. SOS, down by 14%. Siboney, down by 10%. JetCon, down by 10%. And T-Tech, down by 8%. Moving on to the gainers, we have MEEG, that's up 11%. MTL, Margarita Trucks Limited, up by 11%. Rock, up by 6%, Iron Rock. South, up by 4.4%. And Indies Pharma, also up by 4%. Great. Next segment, we'd like to look at foreign exchange, as usual. This is the chart that shows what's happened over the last 4 years, and that demonstrates 5 years average combined annual devaluation rate of about 2.7% per year. And look at that, year to date, after some revaluation, we can see that the exchange rate devaluation year to date is about 2.6%. If you were to annualize it, it would be 11%, but I don't expect an 11% devaluation. And this chart shows sort of the movement in exchange rate. So we do see that it's going up and down in a band. And I guess that's the new normal, perhaps. Chairman, any thoughts from you on what's going on with the foreign exchange market? Dollar's now down at 146.35.
Yes, well, the last couple of weeks we've been saying we expected JMD to appreciate against the US. We're still pretty much in that phase. My view is that we're pretty close to the bottom of it. we're still in tax season, and tax season takes a lot of JMD cash out of the market. So I don't expect the dollar to be, I expect the JMD to be holding its own, certainly through tax season. That's what I expect.
Great. No, I appreciate that. No normal winter season to give us a bump on the US dollar earnings, but I appreciate that perspective, folks converting to actually pay their tax bills. So that's good to know. Gary, any thoughts from you?
Well, I mean, last week when we had the conversation, I think I'd indicated that on balance of probability, you would see the revaluation because of the extension of the tax deadline to March 31st. And so you would have Jamaican dollar tightness, so you might have seen the dollar pull back. I think we're bouncing along the lows now. And, again, on the balance of probability, I think if it's going to break, it's going to start breaking, in terms of more of an evaluation heading back to 146, 147. So this weekend is March 31st, but as you know, we also have lockdowns, which would also work to kind of limit some amount of US demand. And then also people would not want to be going to overdraft over the lockdown period. So Jamaican dollars will still be a premium as well. So I expect it to probably bounce around here. But once we come out of the long Easter weekend, then you should start to see a little change in direction.
No, thanks for that. Always appreciate the insights. Thanks, Chairman Berry. Always appreciate your insights, Gary. Same to you as well, too. Well, to our viewers, thank you all for being a part of yet another weekly Investor Forum. I'd also like to thank our special guest this week, Mr. Iago Castro, for his participation in the investor briefing and providing us with those really great updates and insights on Carib Cement. We're certainly looking forward to having yet another insightful discussion in the upcoming week. We will be featuring not one, but two special guests, namely the Minister of Tourism, the Honorable Edmund Bartlett, and Adam Stewart, Chairman of Sandals Resorts International. Be sure to follow us on social media to stay up to date with our live streams. And don't forget to subscribe to our YouTube channel, Mayberry Investments Limited. Thank you all to our viewers for tuning in today. Keep safe, and remember, Gary,
Slow and steady wins the race.
bye-bye, everyone. Take care.